2022 saw the worst returns for 60/40 portfolios in a century. The underperformance of stocks and bonds, combined with high inflation, pushed many investors into commodities like gold and other hard assets. But one real asset that performs well in these situations has been inaccessible to the average investor until recently: farmland. I'm joined now by Artem Milinchuk, founder and head of strategy for Farm Together. Artem, welcome to Kitco.
Great to be here, thank you.
Great to have you. So tell me a little bit about Farm Together. What inspired it and what was the opportunity that you saw?
Before starting Farm Together in 2018, I spent 10 years in Canada investing on behalf of Canadian pension fund, a private equity fund, and a family office. So I had a very diverse and broad view on the types of investors that participate in capital markets, and also had the opportunity to invest all across the value chain, not just in farmland, but also in food companies and fertilizer equipment companies, and more broadly in international markets and other asset classes. And it was phenomenal for me to see how attractive farmland is as an asset class, and yet how little of it was represented in investor portfolios, both retail and institutional. And gold is, of course, a big one in Canada as well. I worked for Sprott, which is a big permanent gold bug, as we say, and learned my chops there. They were one of the early investors in farmland as well. And I think that's where I initially got my inspiration, as well as some of my friends who were in tech reaching out to me, asking for something that would be completely opposite of tech. And when I would say farmland, a light bulb would go up in their head because it just intuitively makes so much sense as a diversifier. But then the next question was, great, any recommendations for stocks, funds? And there was so few, if any, and it just made no sense. So I built something ultimately that I would use, my friends would use, that, as they say, your grandparents, would you put your grandparents' money into this? And I have no qualm saying, yeah, farmland will be a good long-term investment.
All right, and why haven't individual investors had access to farmland as an investment previously? What was the obstacle for the average investor?
It's such a mystery that in some sense baffles me to this day, because when you think about farmland and agriculture, in a way, it's the oldest asset class. Our civilization started when we invented agriculture. We moved from hunter-gatherer to agricultural societies. And yet somehow when I was starting this, a lot of people would react with, oh, farmland, how exotic. And it's just hilarious because it's a staple. So I think there's a few reasons for this. One, a broad one, is that overall democratization and mainstreaming of alternative investments, such as gold, real estate, timber, infrastructure, is a fairly recent phenomena. I mean, only after 2008, I would say it really exploded. Secondly, the acceptance of online investing. Right now, it's very convenient and very easy for people to go online on different websites and invest into everything from farmland to shares in Air Jordans, right? And NFTs, even gold, of course. So I think that's a recent phenomenon. And then specifically with farmland, part of it is just how offline the market is and how fragmented it is. So there is not anywhere close to the same level of information, and there's not that many natural, call it, innovators in the space. So I have a very unique Venn diagram. I worked in startups as well related to ag. I invested in farmland when it was still tiny, and I saw the opportunity from an institutional retail perspective. I understand also the tech aspects of this that we can talk about. Farm Together, the company that I founded, is a very tech-forward company. So there's not one single answer for this, but it is a plethora of reasons. And I think we're solving some of them.
All right. Now, what makes farmland such a compelling investment? Obviously, this has been, we've had very limited investment on the part of individuals, even institutions, you're saying. Why is it so compelling? Why is it an interesting investment right now?
Absolutely. So when I think about what makes compelling investments, I think it's not going to be a surprise to anyone. You're talking about risk, return, diversification. How does it perform in periods of inflation and recession? So the other way to say, does it give you the peace of mind, and does it protect your principal, your capital? And so when we look at farmland in the last 30 years, when we look at the CRE farmland index, the total net return has been 10.7% from 1992 to 2022. The volatility, which is another way to say risk, although not the only one, was 6.6%. And the performance in periods of recession, so I look at the 2008 crisis, at the COVID period, and then the most recent one has been fantastic. Farmland typically was up, sometimes double digits, when almost all other asset classes were down double digits. So it's a great diversify. And when we compare it with stocks, bonds, real estate, farmland typically outperforms them when you compare risk return profile. And then lastly, as we talk about correlation, farmland typically has been uncorrelated to most other asset classes. So when you think about the long-term diversified portfolio, I feel like you should have farmland in it. Absolutely.
All right, and we're also still in, people would say we're hopefully coming out of a period of high inflation, but the inflation numbers are still high, even though they're moderating. How has farmland historically performed in periods of high inflation?
So it outperformed inflation handsomely. In 2022, for example, the most recent year, right, when everything was down, farmland index was up about 9%. So there's a strong outperformance against the CPI historically, and it kind of makes sense, right? If you think, it's interesting because I love finance. I had my master's in finance, I had my MBA in finance, but I love bringing things down to its simplicity. So inflation is really the amount of stuff remained the same, but there's more money. And so the price for stuff needs to go up. And then farmland, you can't make it anymore, right? Very difficult to make more farmland, even more difficult to make more water. And so, of course, farmland almost mechanically kind of goes up. Secondly, farmland products, what we call feed, fuel, fiber, food, is a component of the CPI. Hundreds of products are derived from farmland. And so they, again, almost mechanically comprise CPI. Now, lastly, I'll say, it's interesting, we have CPI excluding food and fuel, which is volatile. But at the same time, when you think about yourself as a person, well, I know it's volatile, but I got to eat and I got to fuel my car. So this kind of removal of food and fuel was always confusing to me. Well, but that's just a side note to how we measure CPI.
That's true. I mean, we don't get to remove ourselves from food and fuel costs. So removing the most volatile elements of inflation is a misrepresentation of the average person's experience.
Don't worry about it, yeah.
So what types of farmland are available as investments? Can you tell us a little bit about how this breaks down for the average investor?
Yes, exactly. So let's break it down. Because when we talk about farms, I think people have different ideas. In US, there's $3 trillion worth of farmland. Of that, roughly, call it a third, a little bit less, is pasture land. So it's your grass where you graze your cows. We don't invest in that. We also don't invest in dairy farms. What we do invest in, which is the largest share of the total of farms in the United States, is cropland. So this is your corn and soybean fields. So when you're flying, let's say over Illinois, you'll see a lot of those. And that's what we also call annual crops or raw crops. You plant them every year. And then secondly, we invest a lot into what's called permanent crops. So this would be your nuts, your fruits, apples. And it's, again, very simple. You put a tree in the ground, and then once it matures, it produces a crop every year. And there's certain similarities and certain differences. Farmland, just like real estate, is not homogeneous. So there is a number of subsectors when you invest in farmland.
All right. And how does Farm Together package this? If you're an investor and you're coming to Farm Together, how do you make this accessible as an investment for someone who hasn't necessarily invested in anything agriculture related in the past?
Yeah, our goal is to democratize this so that anyone could invest in farmland. But right now we have three options. There is the crowdfunding option that is opened to accredited investors. You go online and you can see individual deals that are offered with investment materials attached, a webinar, easy to understand documents, as well as more comprehensive legal package. So we really invest a lot of time to educate people on the risks and on the opportunities and how to analyze opportunities. Those deals are typically, the minimum is 15,000, and you can buy multiple of those deals. We make it very easy to sign documents, to wire money, and to manage your portfolio on the website. Number two is a fund. So if you don't want to build your own portfolio, you want to invest into what aims to be a diversified portfolio, you can invest in a fund. And it's a traditional fund structure. It's just that you don't need to wait for a new deal to come out. The third one, if you have a little bit more capital, is a bespoke opportunity where we will essentially create a private fund for you, and you can buy one or more farms all in your own name. That one requires, of course, more capital, but you get to fully customize your experience, your legal and tax structures, and reap some additional tax rewards through this full bespoke structure that we offer.
All right, and these bespoke investments, you could, for example, target almond trees. You could target, so it could be targeted geographically, it could be targeted according to the crop, depending on the advantages of that investor. Say a California-based investor might be very, very interested in specific types of crops, specific types of subsidies or tax offsets. Is that how that works?
That's correct. Yes.
All right. Well, thank you so much for joining us today, Artem. This is a very interesting asset class, and not very many people are aware of this.
Thank you. It's been great to be here.
You're watching Kitco News. Don't forget to subscribe.